So this video is the full tax guide for business owners to beat the IRS. I am Mike Jezoshek, and I'm a registered CPA and have been an entrepreneur and in the financial services industry for over 20 years. And I have been able to help thousands of business owners save millions on their taxes. And the truth is that the problem is not that it's hard to structure everything in a way to beat the IRS. The problem is simply that you have not been educated on how to do that. The right information is hard to come by. But that is precisely what I'm going to be helping with you today. I'm going to walk you through the 4 steps that you need to take in order to save thousands of dollars on your taxes and beat the IRS. So with that being said, let's dive right into it. The first step to beating the IRS is understanding your business structure and tax implications. You know, the foundation of your business is your business structure. And without optimizing that foundation, you don't have a complete tax strategy. And so when we look at that foundation of your business, it's really independent. Where are you at in your stage of your business? Where are you at from a revenue standpoint, from a investing standpoint? You know, and there's a lot of different options out there. Everything from a sole proprietorship to an LLC to a C corporation, and then to one of our favorite business structures, and more so just a tax election, the S corporation. And so having a solid foundation, which is your business structure, is going to set you up for success and determine what does that look like from a tax saving standpoint. Also, often we see people, small business owners, think about this business structure last. They get this business rolling, they're doing really good, and then they come back to this business structure, and by that time they've either paid too many taxes, they're set up wrong, they have to make a bunch of adjustments. And so my hope is that by reading this, you're at least setting yourself up for success from the beginning, creating that foundation for your business to go from. One of the most common steps that we see is an LLC. So we're organized as an LLC, and your attorney will talk to you about how that creates some protection for you and your business. But then we see that with an LLC, we get hit with something called self-employment taxes on 100% of our income. So for those business owners that are just getting started, just getting out there, they set up an LLC and now they're getting hit with self-employment taxes. And so the next step that we often see small business owners take, and we talk about all the time, is this idea of then electing for that LLC to be taxed as an S corporation. An S corporation is simply a setup that allows you, a tool that allows you to minimize the amount that you pay in self-employment taxes. And we have tons of content on an S corp, when it makes sense, when it doesn't. And so we don't always want to rush into a business structure, but it's important to get that foundation, understand what's available out there and what makes sense to you. So the first step in beating the IRS is making sure that you have the correct business structure for where you're at in your business. For those that are just getting started, maybe you're just an electrician, you have yourself as the only worker, maybe you have another employee. You know, the structure that you set up might look very different from a software company that has 300 investors and venture capitalist funding. That setup is likely going to look different. And so it's understanding what structure is best for you in your business where you're at today. The second step in beating the IRS is having accurate books and records. You know, we always say bookkeeping is the backbone to your business. And without solid bookkeeping, you don't know how you are performing. And you have increased stress during tax season, which can easily lead to errors, mistakes, missed deductions, maybe too many deductions taken. And so that is why we always say you need to have accurate bookkeeping. You need to have accurate records on file. The reason that this is that it helps protect you. It helps you let you know throughout the year, hey, how is my business doing? Am I up? Am I down? What's my tax liability going to look like? It helps you keep a record of saying, oh, you know what? I've been paying rent for this storage facility, but I haven't been recording it. It's not on my profit and loss. So, I'm paying for it personally. Let's factor out how we factor that into it. So the bookkeeping is not only helps make tax season super easy, but it's the backbone of your business. It tells you how is your business performing at any point in time throughout the year. And so some key points to how to make sure that you keep good bookkeeping and accurate books and records is to have separate bank accounts. Have a separate bank account for your business. Make sure that you're not commingling activity, because that can cause problems not only from a legal standpoint, but from when the IRS maybe would look at your business and maybe start to scrutinize things. Having a bunch of commingled where business expenses and personal expenses and everything's happening in the same place can really cause some issues. So number one, have a separate business bank account and credit card that's separate from your personal. And anything business related, run through that separate account. So you can at any point in time look at your business bank account and see all the activity and know that it's all business related. You're not sifting between personal and was this business, was this personal. It's all cut and dry. Business here, personal there. The next thing is we say utilize a cloud-based accounting system. There's a lot of technology out there that makes this bookkeeping a lot easier. You can utilize a cloud-based accounting system that you can actually connect your accounts to it. It'll automatically download transactions from that business bank account that you already set up now and that you have that business credit card. It'll download the transactions, and then you just need to take care of coding those transactions in the right account. Always keep all receipts and write directly on the receipt. Who, what, where, when, why. Right on that receipt, I went to dinner with Joe and we talked about business development, and he's going to start sending referrals to me. And on the receipt, it's going to have the where, the restaurant. It's going to have the what you purchased. That's going to be your meals and things like that. It's also going to have a date and time stamp on there. And then you're just going to write on it. Met with Joe to discuss business development opportunities. Take a picture of it, store it digitally, and keep it on file. Part of this accurate books and records is to help you sleep at night, to know that, hey, if the IRS came knocking, I have nothing to worry about. We have all this information documented. I have records of all the purchases we made, the business reason for it, the purpose of it. I have clean books. If the IRS comes knocking, it's like, here's the information, and they have no problem with it. They move on. We always say do the bookkeeping at least on a monthly basis. So what are some things that, this backbone being this bookkeeping being the backbone of your business? Have a separate business and bank account and credit card. Utilize a cloud-based accounting system. There's software out there like QuickBooks Online or Xero, Xero. At least update that bookkeeping system monthly so you can have a constant record of how's your business going, making sure that you have everything recorded properly, you're looking good there. The other thing that this does is it allows you to plan for estimated taxes. As a business owner, you are now responsible for doing that federal withholding, that state withholding for the income that is generating through your business. And by having an accurate set of books, you know exactly where you're at from a profit level, and you can run some estimations to see what will my tax bill likely be. And can I make some payments to start going towards that to avoid interest and penalties down the road? So that's the second step. Have an accurate set of books and records. The third step to being the IRS is this idea of maximizing deductions and utilizing core tax strategies. Now, this is your opportunity to take advantage of incentives that the government gives small business owners. Now, the government's not going to force you to take advantage of these incentives that they have put into law specifically for you to use. They're not going to knock on the door and say, hey, I noticed you're not doing this. Make sure you do it. No, it is up to you to know what's available to you and utilize it and put it into practice into your business. And this is a key step. Now, when people hear maximizing deductions, they oftentimes think of, that just means go out and buy a truck that I don't need and go out and buy a new piece of equipment that I don't need. And that is the opposite of what we mean when we talk about maximizing deductions. And so I want to go through a quick concept of this. We call this pre-tax spending versus after-tax spending. And to give a quick example, what is pre-tax spending? What is after-tax spending? I like to give an example of when COVID hit. So when COVID hit, if you were a W-2 employee, you're now working from home, you had to go out and buy a desk, you had to go buy some monitors, maybe a microphone, maybe a camera, whatever it might be. You went out and made these purchases. But because you're a W-2 employee, you get no deduction for those purchases that you made. So you're using after-tax dollars. You're using money that's already been taxed to pay for that. Because as a W-2 employee, you have your gross wages, you have all these taxes taken out by your employer, and then you get your take-home pay. And that take-home pay is what we call money that's already been spent. So any spending that you do with that take-home pay is considered after-tax spending, money that's already been taxed. Now let's flip the switch. You're a business owner, and how business owners get taxed is you have your business sales or revenue, and then you have all these expenses that go into it, and then whatever's left over is your business profit. And that is what you get taxed on. So any spending that you do within your business is considered pre-tax spending. It's spending done prior to those items being taxed. And so that business owner that went out and is now working from a home office, bought a desk, bought a monitor, bought a camera, bought a microphone, whatever it might be, those are all money expenses that are being done in the business, and that is pre-tax spending. And so our goal as business owners is to say, how do we move after-tax spending into pre-tax spending? How do we find a business purpose to spending that we're already doing and get a business deduction for it instead of using after-tax dollars for it? Just think of things like this. I always say, think of things like a home office deduction. That's a great opportunity. You're going to have your house. You're going to be paying for those utilities. You're going to have that stuff anyways, but now you can get a deduction for it. Cell phone and internet, automobile. You're using your personal automobile or a business automobile. Maybe there's health strategies that we want to look at, whether it's self-employed health insurance or maybe a health savings account, which we recommend every business owner and non-business owner be fully taken advantage of. You might look at setting up a board for your business and having board meetings and utilizing expenses around that. You might be thinking about, how do I turn travel that I'm going to do with my family into a business deduction? Attend conferences, visit vendors, visit clients around travel that I'm doing, and find a business purpose for at least a portion of it. We might take a new look at approach to how we look at meals and think of every time you're sitting down for a meal, there's oftentimes a business discussion there that's ordinary necessary for your business. So let's rethink of some of those meals that we take. We might look at hiring your kids. How can I get a business deduction and my kids potentially pay no income taxes? And we all know kids are expensive and we're supporting our kids. So how do we do things like that? So this is that idea of maximizing deductions. How do I turn after-tax spending into pre-tax spending? How do I take spending that I'm already doing, but find a business purpose for it and turn it into pre-tax spending? And that's the concept of this. We're not talking about going out and buying something that you don't need just for a tax deduction. That's not maximizing deductions. So that is one core concept of various strategies that we call this one of our core strategies. And many people hear maximizing deductions and they think just truck and they move on with it. That's not what we're saying. When we talk about these core strategies, there are so many different strategies that kind of wrap up into this idea of maximizing deductions, turning after-tax spending into pre-tax spending. The fourth step to being the IRS is to understand this idea of tax planning. What is tax planning? And what is tax paying, as well as learning tax strategies and correctly implementing them. So tax paying is just this idea, or tax preparation, I like to say too, is just this idea of putting information on a tax form and sending it to the government, sending it to the IRS, sending it to state agencies. That's all tax preparation is that we're taking information, we're telling the government, here's what happened in my life last year, and I want to pay taxes on it, and here's the reconciliation of that. Tax planning is this concept of learning strategies and then putting them into practice. And a lot of people, when they hear tax planning, they think, oh, that means making estimated tax payments. I'm going to meet with my accountant and they're going to tell me how much I owe in tax. And that's tax planning. No, that's not tax planning. Tax planning is, again, learning how you save taxes, what strategies are available to you, and then implementing those strategies. And I always say, learning is just the first step. That doesn't provide you with tax savings. Implementation, and more importantly, correct implementation, is what leads you to tax savings. So if you just learn about hiring our kids, that doesn't provide any tax savings. It's good. You want to learn to it, but until you implement it and until you correctly implement that strategy of hiring your kids, that's when you're going to see the tax savings. Remember, the government gives business owners certain incentives, but they don't advertise it. They don't force you to use them. That's your responsibility. It's your responsibility to understand what incentives has the government given me. I need to learn it and I need to implement it, because the IRS isn't going to implement it for you. They're not going to come knocking and say, hey, you didn't hire your kids. You can, and here's how you do it. No, the IRS is here. It's in the tax code. We've given this incentive in the tax code. It's your responsibility to learn it and implement it incorrectly. And so it's a lot of people understand a tax strategy, or have heard of a tax strategy, but they don't know how to implement it, or they think it's too much work and more work than what it's worth. And that's when we can start to peel back the layers and understand that these tax strategies are cut and dry, and they're very easy to implement and can make a very powerful shift in the amount of taxes that you pay. Other business owners come to me and say, tax strategies, tax savings, that's just for the rich. And I tell them, honestly, back to back, we implement strategies for a business owner making $20,000 a year. In every single one of those strategies that we implement for that business owner making $20,000 a year, we implement for that business owner making $1 million a year. Now, sure, as you have higher income, there might be some more advanced planning and different strategies that we add on to it. But for the vast majority, I look at a business owner that comes through our software, TaxHelm, that's making $1 million a year. And let's just say we're implementing 25 strategies with them. That business owner that's making $50,000 a year, we're implementing 23 strategies with. So do not think that tax planning is just for the rich. Tax planning and tax savings can be done at any income level you have as a business owner. That's what I want you to focus on. That's where I want you to help on. Remember, implementation is the key. Implementation is what creates the tax savings. You can learn about tax strategies, but until you implement it, you don't get any actual savings. So we need to make sure that we understand the strategy and we have correct implementation of those strategies as well. So now that you know exactly the steps you need to take in order to beat the IRS as a business owner, you can apply these steps in your own life so you can begin to save thousands of dollars in taxes. However, remember that everyone's situation is different, and there are many small questions and roadblocks that will likely come up in your situation that I wasn't able to cover in this short of a video. So if you're ready to take action and begin saving thousands of dollars for your business, click the first link in the description. It will take you to a page where you can sign up for our training, where we will hold your hand step by step through the process of paying as little in taxes as legally as possible. See you in the next video.